When I joined the Baltic in February 2017, I came from a ship owning background, and when I was sitting there looking at the data suite, everything that the Baltic published, I realised the fact that if I wanted to do investment calculations or residual value calculations on ships, that the Baltic provided all of the data except for the operating cost. So it seemed like a logical thing to do, which is to go out and see if we could price the cost of running a ship on a daily basis to give that transparency to the marketplace about how much it costs to run a ship. The OPEX, it does vary. I mean, there are, let's say, studies that go on into the cost of running ships, but they tend to be an annual survey and they go into a lot of granularity. Benchmarks, which is what the Baltic produces, tends to try and come up with a standardized description which you then get some people to report on. So it was a matter of one, standardizing what does the ship look like, how does it trade, what sort of flag, and then break down the parts of the costs, and that we broke down into three main parts, which was crewing, technical management and insurance. And then we threw in an extra fourth one, which is the cost of a 5-year dry dock. And that actually is a lump sum value which we amortize over 5 years. But the OPEX itself is built from those three component parts: crewing, technical management and insurance. So we went out to professional technical managers who are managing owners' vessels, fleets of vessels, and we went to them. In fact, what we did was we set up a working group. We sat with them to make sure they were comfortable with the ship's descriptions, you know, the actual number of crew, because we had to do averages. You know, there are so many owners run their ships in their particular way, but we were trying to come up with this description and trading of a vessel that everybody could relate to and actually say, okay, well, I'm slightly different, but that's a basis point. And that working group went on for a couple of months, and essentially technical managers. They agreed on the 4 pricing points, what the ship looked like, and they now report on a quarterly basis. They do it 1 month after a quarter closes, so that they can refer back to what actual costs were and try and make an assessment as to what they think the next quarter is going to be. From a panelist perspective, one, they want to advertise their work. It also assists in the marketplace in terms of providing some transparency and to try and demystify how the cost of running ships. That's part of their rationale, is actually providing this service and for people to be aware that companies provide this service in a very effective manner. The OPEX index itself, because it's only quarterly, doesn't actually have that daily monitoring that goes on for the rest of our indices. But everything we do is based upon a methodology that is enshrined in a guide to market benchmarks. The Baltic is now a regulated business, and that guide has been registered with the FCA. We have a team of assessors who are monitoring the numbers. We have a quality assurance and quality management to be able to make sure that the audit processes, the error checking, this all takes place on every number that is submitted to the Baltic Exchange. And the OPEX does fall under that same methodology. The interesting bit is that this is a pretty new product for us, and as I mentioned at the beginning, you know, the original idea was to be able to include the OPEX into investment calculations to produce residual price, to even something as basic as saying, what's the health of the earnings? Is the spot earnings of a vessel below its running costs? If so, how long can it last for? There's something's got to change. So it was very much as an input into what we want to launch, which is an investor pack. But when we first announced it, we were a little bit surprised because we had some ship owners who put their vessels out on long-term period, 10 or 15 years, and when they do that, they have to build in an escalation clause, normally on inflation, to do with the operating costs. And what people came back and said to us is, can we use that OPEX number as part of our long-term charter? So if the OPEX for running a Capesize is 5,000 and you were going to pay 15,000, what you say is it's OPEX 5 plus the 10 for 15 years. We will capture if suddenly there's a regulation change that requires an extra crew member, insurance goes up, so therefore it's truly reflective of the actual running costs. And so that is a much fairer position for the owner to be in. So at the moment we're publishing on Cape, Panamax, Supras and Handies. We have got a project running at the moment to push that out into the tanker sector as well. And yeah, it's a work in progress. We have to go and approach other technical managers, agree on the spec of the vessel, but we'll be doing both tankers and gas carriers. And so fingers crossed, we should be having that at the end of Q2.